Today I'm going to show you why there could be a 40% move incoming, and having a look at this tweet. First and foremost, a signal that has never ever failed. So we're going to get into all of this, and I wanted to start off with the total crypto market cap. Credit to Justin. He brought this tweet out over here. He said, don't forget that last week was a bearish engulfing candle for crypto. They've been an incredibly accurate signal of turning points for the last 15 months. And maybe the pain is not quite yet over, although you can see, and especially on Twitter, that the bullish sentiment is starting to shift slightly, and people are getting excited, thinking that we're ready for a mega pump. I know a lot of the people at the office are positioned long, but I'm going to show you the trades that I've taken. I have about 3 or 4 on the table currently. And having a look at this, look, guys, so from May over here, bearish engulfing candle came all the way down, bullish engulfing candle, massive moves to the upside over there. And now we have yet another one over here on the total crypto cap over here. So look, stuck below. Firstly, we rejected from the liquidity box above. We've fallen now below the 21 EMA as well as the 200 EMA. And I would say next target remains all the way down here at about 857 billion. So we're going to probably lose that trillion mark again. And then the question is, do we bounce from there? And I've always said the trend is your friend until the end of the trend. So I hate to be that what seems like a perma bear. It's just the bear markets take long. I'm just sticking with the trend, and it really is as simple as that. We have a strong downtrend over here with 2 waves that have taken place. So your first wave, second wave, and now we're just waiting for that third and final wave. And I have mentioned this before, looking at this chart over here with the different liquidity zones, I must be honest, it's very difficult for me to believe that price will come all the way down into this zone over here, which would bring the market cap to around 400. I mean, it's hard for me to even say that that's under 400 billion. Like, when you just look at this from pure TA, 290 billion to 390 billion, that is, if this zone gets lost, that is the level that you're looking at for the third and final wave. I hope that doesn't happen, but I'm still sticking with the trend. And so far, the trend is telling me to be in cash. And speaking of which, I said over here, mystery chart. Would you long or short this chart? Long or short? Which way is this chart going? Is it going up or down? Please let me know in the comments. We'll tally this up towards the end over there. I'm very, very curious, and I will touch on this one in a little bit. I just want to see what you guys say in the comments, and then in the end, I'm going to reveal to you exactly which chart that is. So let's have a look over here at Bitcoin. What is Bitcoin doing on the weekly chart? You can see that the cross is still going to happen. That is imminent, the death cross over there. Let's clear some of this up. Delete. Okay, look, one good positive sign for the bulls over here is that they have reclaimed that weekly close area, which from the prior week, which is coming in at 21,514. But when it comes to these candles, the most important thing is the closes. The intra-week plays for a long-term investor and the intraday plays are not really important. That's not what you focused on. You focus on catching the main meat on the bone, the bulk of the move. And in order to determine that, look, you want to ask yourself, as I've mentioned before, you look at the previous week and you ask yourself, based off of this information that we have over here, what is the most likely outcome for the following week? And if you didn't have any information like we do here, where current price action is sitting, I would say, well, this is probably going to be a follow-through candle. And the reason why, similar to the total market cap, this is a fully bearish engulfing candle. It engulfed 1, 2, 3, and okay, let's give it 3. It engulfed 3 weeks worth of upward price action, and it's pretty much not looking that good. If this level can bounce, great. Maybe it forms some sort of a higher low in relation to this area. But at the moment, there is still a lot of work to do for the bulls, and we have to just play it level to level. So with that being said, there are some important things that took place yesterday when the market was rallying, and Dylan Leclerc says it here very nicely. He said, who is watching the bonds, the government bonds? So when he made this tweet, I went to go look, and I had a look. Okay, S&P 500, everything is up slightly. You know, Dixie's up, NASDAQ is up. And then I went to go look at the government bonds, and they were pushing up higher than what the stock markets were, which is uncharacteristic. And there's some important things to consider. And Mac 10 outlines it right over here. He says, This level and above on the US T bond yields brought global crashes every time since 2008. This time will be no exception. T bonds don't believe the Fed and today's financial pundits. It thinks that they're all proven bullshit artists who have to keep herd morons happy. So, a lot of harsh words over there, but essentially, if you have a look over here, every single time that it stretches into this region within this zone over here, then you can expect that there will be some sort of major crash. And having a look at those bonds, we can check them on our charts over here. You can see that it is still in a strong uptrend. Let's see what the 10-year did, because the 10-year was breaking down. Look, as you can see, 10-year was breaking down. Now, in relation to this side over here, it is starting to clear that level, which is an important zone. If it starts to hold above here, this could have been a big fake out to the downside, and it could push a lot higher. So we need to keep our eye on the government bonds. Looking at the stock market again, we have really beat this horse dead, as they say. We've really covered it a lot, but just touching very quickly on the S&P 500 futures, rejection off of that level today will be important. Not a very clean pattern, but it could form some sort of almost like a head and shoulders pattern over here. So I'll be watching that closely as well. NASDAQ slightly up, but same thing, most likely going to lose that key horizontal level. So covered that enough. 3-day on Bitcoin is still trending down with our momentum oscillators. And I think that this next upcoming move will be quite big. I think that it's all going to depend on whatever happens with this Jackson Hole and the Fed and what they have to say. But if that is taken as extremely negative, then you can expect that probably we are going to lose this zone over here, which has been all important. And the reason why is because we've tested it so many times. And I've shown you guys this before. Very little support over there. It's not a strong level of support. We only have a couple of days of closing price action over there, which means that it won't be that hard to get through. And a lot of people are turning bullish. Like even people that are here in the office have come to speak to me about long positions. And I said to them, like, look, you just have to ask yourself, which way is this trend? If you put it on a daily, it's a little bit easier to see. Very, very simple over here. You have this zone, which has broken down that level over there. It's now losing the trend, right? The trend is changing. We had the start of a nice uptrend over here, and the trend is your friend. It needed to bounce from here, failed to do that. We lost that level, came down, and it made a lower low. Now you're looking for shorts, or at least the high probability trade. I'm not telling you what to do. You can do whatever you want to do, but the high probability trade is to take a short position into resistance and look for any sort of weakness at a lower high. So weakness at a lower high, push into that zone. If we do get some sort of a major pump around the 23K level, look for weakness and for shorts building up positions over there. And that could be your signal to trigger over there, and off it goes down. So that is essentially what I'm watching, and I've been positioning for some short positions. There are some nice ones, which I'm going to show you towards the end over here that have lined up nicely. So looking at this chart over here, this is Bitcoin on the daily. I did mention it yesterday. We spoke about contraction, expansion, contraction, expansion. I also added this in, which went into the daily candle newsletter. You can see that each time we had a final bull trap before the major expansion to the downside. And I'm wondering, will this time be any different? Is there going to be some sort of a pump that will come directly into this level, which, again, I'm looking around the $22,500, $23,000 level. Final pump. I think El Capo has also been looking at those kind of levels for Bitcoin. So keep an eye out. If something spikes into that zone over there, it's all about probability, right? And your risk to reward ratio. You can build a very strong case for a good risk to reward ratio of shorting that level. And I'll be watching that closely. I also did the same chart now on Ethereum to see in comparison what this one looks like. So let's take a quick look at it. Here, same thing, contraction, expansion, big contraction over here. Ethereum almost flipped green and went bullish, and then tightened in again, expansion to the downside. And now you can see something very similar happening to what happened in this zone over here. And that is essentially contraction and prices trying to push up. If I zoom in, you do have a warning sign over here, which is a lower low in relation to that level over there. We failed to maintain the higher lows, and not surprising because this thing was starting to go parabolic, of course, in anticipation of the ETH merge, which will only have 3 weeks to go. But if you are long in Ethereum, I would say that's fine. Just track this support. This is not the main supporting trend line. I would have said that is. But look, we're trying to give the bulls some hope over here. Potentially, they could set a second higher low over here, and we just forget about that. That's the thing, is these trend lines are, they're very subjective. This is why you need to focus on horizontals. And what do you know? Where's your horizontal? Your horizontal is coming in over here. That's the next major horizontal to focus on. You can't deny it. It's resistance. If this manages to get back above over here with Ethereum, and it can break through this level, I think this could really start to rocket. Then it could form an explosive move that might create a major short squeeze, and price could push up. But with that being said, any sort of price action that comes into this resistance area, which, to give you guys the zone, I'm looking at, anywhere between about 1,720 for ETH, potentially even pushing up, like really, really pushing to like 1,800. If it can start to get to those levels, that's the level that you're looking at. That's where you're expecting some sort of a short or some sort of a bull trap over there. And it might look like this. You might get your typical deviation. So deviation pushes above over there, and now you start to see the weakness in this area, comes back down. You break the support line, and it's over, basically. It's over. Then this thing is going to go down hard. So that is it for Ethereum. Now, very quickly, I wanted to touch on this. I think I solved the problem over here. I was clicking on the wrong thing yesterday. And that is for OKX. Let me open it on my phone. I did find it now. Let's make this nice and big. So I told all of you guys. Also, let me know. Tell us here in the comments if you did open your OKX account and if you did get something in the mystery box. We're going to do this one now live. So let's quickly, let me start screen recording as well, just in case. All right, there we go. So as you can see, there is, can you see it? Let it focus there. Okay, the mystery box over here. Let's click on it. Claim now. Shake it to open it, it says. Okay, I just received, I don't know how much this is. We have to calculate. Okay, you can't see the numbers because they're in green. I got 0.00064 BTC. How much is that, James? Let's have a look. I will just check it out over here. So 0.00064 BTC to USD. What do we get? What? Oh, no. Okay, there. I read the 21,000. Okay, I got $13.89. Like, I mean, come on, that's 2 cups of coffee. How can you complain? Free money, right? So make sure that you sign up using the link below. They do have up to $10,000 in crypto rewards that you can claim. And anyway, let's move on, getting straight back into the price action. Very, very important over here. Thanks for my congratulations on the lottery winnings. I do appreciate it. Okay, looking at this chart over here, same thing. I'm looking for areas of confluence if I am going to build up some sort of short position. And my main area of confluence on Bitcoin is going to be this. Let's grab the box over here. So I'm watching this area over here. You can see that this has been quite a sticky area. I'm sure you can all agree with me on that. So take that box over there like that. And this has been a primary area of control for the Bitcoin chart. And if you take a look at that, that comes directly in line with that 34 EMA, which is an important exponential moving average that's governed the trend throughout. And I have shown this many times. Let's make it big for you. So have a look at that. Anytime it pushes into that, it's been rejecting off. Same thing pretty much all the way since the absolute top over here when you started to break down. Price pushing into that 34 EMA down, into the 34 down. Tried to reclaim over here, big bull trap and down. And then same thing over here. Started to set a bull trap, but luckily for us, we were smart enough to realize through these types of candles, we had all the major. Let's turn this off over here. 1 second. My mouse is going haywire. Let's clear that up. So lucky for us, we were able to identify over here all the shooting stars. It's the magnet that's giving us problems. all the shooting star candles over here that continue to lead to downside moves. We did notice a major one over here. Price started to push up, but we could see that sellers were adding pressure because you've got these massive wicks that have been left behind. And we knew that that was ultimately going to lead into the breakdown of a rising wedge, bull flag, whatever it is that you may want to call that. Now, what we again ahead of the crowd, and we know that any sort of price action that pushes into this green box over here, which has been an important area, and into that 34 EMA is a high probability area to go short. And I'm not saying short with everything you got. I'm just saying you can start to build a short. When I enter my positions, I like to take about 10% over there, 10% if it starts to go against me. And then as I near my invalidation, I'll get a little bit more aggressive with the position over there. So with that being said, your 34 EMA is coming in at $22,591. Tomorrow that will change because, of course, it is trending down. Price action dictates how rapidly it's moving up or down or sideways. So 27th, we have on Saturday the print of the next bare moon. I'm not an astrologist, but yeah, this thing works. And then Friday, we do have Jackson Hole and everything going on with the Fed. Perfect catalyst, in my opinion. Wouldn't be surprised to see some sort of a scam pump up. Make sure you have your stops positioned well enough that they're not too tight so you don't get stopped out. You want to remain within the position if you do decide to go short. Now, with that being said, look, what about the bulls? What if I'm wrong? What if I'm completely wrong? Well, it's the same thing like I just pointed out on that other chart. You did make a new lower low, and now pretty much you're going to have to wait for an entirely new trend to establish if you want to be safe. Depends on how you trade, right? You can range trade, you can scalp many different ways. I'm talking more at the moment to the range traders that are trying to establish a new trend. So looking for, sorry, not the range traders, the trend traders that are looking for a new trend. So what that would look like, maybe price pushes up over here, doesn't manage to clear this level to make a new high, but then it turns and it comes down again. Maybe people start to bid over here. Now you've got one data point, 2 data points, and then you can put in your trend line over there, and then you'll be waiting for the third one. Let's say price still doesn't make a high in relation to that area. The third one, that you'd be safe to buy that. Not only that, you'd also break down this major diagonal trend line. So I know this is very rough what I'm showing, but I hope that it does make sense. That is essentially the line of thinking. If you were bullish, I'm either looking for this level to be cleared, the previous high, which is coming in. That means price action needs to start closing daily candles above 24,500, or I'm looking for price to push up, maybe fail that next swing high, come down, but then hold a higher low in relation to these lows at 20,800. And if it does that, then I might start to look for longs to position into. But at the moment, guys, I don't see it. I just think pressure remains to the downside and we are more likely to go down. I can always be wrong. It's just a game of probability. So moving on. Okay, let's skip that chart. It's not too important. I want to go on to this one over here. This was the initial trade setup. So we're going to get into some of the trade opportunities over here. Initial trade setup over here. I was looking for potential long into this zone. And I have clearly outlined what this horizontal box is. It's the same thing that I just showed you on the daily over here. That's the same level. So if price can push into that area, that is where I want to enter a short. I may have to be forced to change this plan depending on what happens over the course of today. If bulls are not strong enough to get price up to that level, I may have to start looking at this zone down here. So for example, something like this, I may need to start to look to flip short within this area over here, because if they're showing weakness and they can't manage to get price through this area, and it looks like it keeps rejecting off of the 21,000, to give you the number, $21,800 level, I may start to build a short position from there, but we're not there yet. Let's give the bulls a little bit of time, see what happens over the course of today, see what happens with the stock market. Now, another nice trade that I found over here, I did see this was mentioned on Twitter, so I thought, well, let's quickly chart it, is, and I put that in the Discord VIP group, by the way. I've mentioned many times, you're all very important to me, but they do have clauses of how to get in. You need to just use any one of the exchange links below and you can get in, make a small deposit, Doesn't matter. I don't think how much, $5, $10, whatever. That is your ticket into the Discord. And that is where I have been dropping the trades. I've dropped 4 trades in the last 24 hours. This is the latest one, giving you this one for free. Essentially, you have this main zone that that Matic has been consolidating within. You have a very, very simple trend line over here. This would be your main trigger point to get into the trade. You probably could have already entered this as it's rolling over, and it has formed a lower high in relation to the left-hand side over here. But once this starts to break down, if price comes through, breaks that level, pretty much, you can now start to really load up on that short trade. And I would definitely TP probably half of it halfway through and the other half at the bottom of that range. So guys, that is it from me. If you enjoy this video, please make sure that you give it a like, hit the subscribe button, hit the bell notification. And that is it from me today. Until next time, I will see you guys all on the following video. Trade safe, trade well. I'll see you in the Discord. That's where we can stay in touch. If you're not in the Discord, I will still, of course, post on Twitter. I'm not neglecting anybody. And I will see you all on tomorrow's video. Cheers for now.